What you guys are looking at right now is probably the most beautiful market maker sell model setup that we have seen this entire month. So without further ado, let's jump in. Let's watch how I dissected this, how you were able to spot this happen in real time, just why this was so high probability, and then finally we'll look at how over-analysis caused me to take 2 losses instead of an 5-10R beautiful banger today. All right, let's start with some top down, just completely clearing up the charts. Let's zoom in. We opened the market right here. So I'm gonna draw this candle right at 9 o'clock, right here. And on NQ and ES, look at this divergence that had been put in place pre-market. We had an SMT, an external SMT sitting somewhat just like this, with this giving us a bearish bias going into open. As well, we're also within 1 hour for value gaps on ES, and we're in an area which we expect to reject because we're back at equilibrium of this range. And everything here is looking perfect to see a sell model potentially play out. So let's see if we can react to this happening, right? Zooming into the 15 minute. What we see on open is a beautiful, beautiful manipulation, right? NQ ends up making an internal SMT with this high. ES doesn't. So NQ is a manipulated asset. What it ends up doing is perfectly placing in a change in the state of delivery and then completely just selling to the downside, right? The only opportunity for entry here would have been zooming into the lower time frames, which is what I like to do for my entries, and taking an entry right here. So let me show you guys how, with this beautiful butter setup, I didn't top tick the market today. So the levels that I want to see get hit were this 3 a.m. London low, and then right down here, right when these fair value gaps start to open and this generated liquidity stops being present, this is all fair value gaps. I want to see these 2 levels get hit, and then potentially a super far external runner for this level, right? So what we saw was this. Market opens, we had 10 a.m. news, which really didn't have any kind of effect. And we saw this play out. We see a complete sell to the downside, right? But at this point, after this initial low gets put in, there is no 15-minute change in the state, right? This was my first error, right? I saw 5 minute, okay, it looks fine. 3 minute, I mean, like, you can see like the displacement, like there is a change in the state here. We know that. We know that the market has shifted, but the 15-minute hasn't confirmed it with a candle closure. We must wait for that candle closure. So this is my first loss. Zooming in, we have this push below the level, and keep in mind we are back within fair value gaps here, and the reason that we're not scared of that is because the narrative has shown us that price is now manipulating the highs, and it looks to push lower because it's generating liquidity entirely in the overnight session. That's what price is showing us. It's not saying, okay, we could potentially see this, because this is just one argument against our 5-10 bearish argument. So if we have one bullish fair value gap, that's not going to invalidate our entire trade. So my first loss comes right here. I saw this and I saw this pullback. I saw the pullback to this order block. There was a 5-minute change in the state somewhere around here. I'll just mark it right here. And then zooming down to the 30 seconds where I ended up taking my entry. So we saw the tab back into these fair value gaps, this internal level getting sweep. This becomes our stop rate, right? Now we're looking for a inverse fair value gap. We're looking for displacement lower with the change of the state, right? We don't get an inverse fair value gap. However, we get that change in the state with displacement. Place my order right here. And I was like, all right, this could be a little bit of an early entry, but I don't mind taking this loss. It looks like it definitely will play out. This would have been first TP, second TP, and then planning on holding all the way to these lows, right? The manipulation leg that you would have drawn out would have been right here. Fib retracement, pulling this to right here, look perfectly aligned with 2. We can definitely see that get tapped eventually, right? Looking really good to me. So what ends up happening? Well, right when I place that order in, we see a huge 1 second, like within a second, the market just completely stops us out. Market's looking good, pulling back, and then boom, complete insane wick right here. So it just completely stops me out on same second, same candle. Thankfully, no slippage on that. So I get back up, I start analyzing, and I'm like, all right, I need the candle closure here. I need this candle closure. So I get the candle closure right about here at this 10 a.m. low because it closes below this level right here. Then now what I'm looking for is simply a pullback to hit some kind of level, which is usually our change of the state. But with this structure, I was looking to see this internal high get hit because we have equal highs sitting right here, and everything looks really great to potentially see some kind of turtle soup of this high that will then bring us some structure to then push price lower, right? This is what I was expecting to see. Instead, we just found support, or we found resistance off of that change in the state level. And if you see on ES, we did similar thing. However, the structure on ES was super choppy, right? So yeah, we ended up placing kind of this little bearish SMT in here, or bullish SMT right here, but the structure was super choppy, and NQ was definitely the one that was leading price action in terms of where we wanted to go for the day, because NQ was holding ES up during this morning session when ES just wants to drop, and then eventually it starts pushing lower on its own naturally, and ES kind of has to follow. The more you watch price action, the more you're able to tell who is the leader, and you're able to actually watch it and say, which one do I want to trade? ES is kind of sitting in this range, kind of following a little bit, but NQ is making these big moves and actually showing where price wants to go, showing the drive and the narrative and the actual steps behind where price wants to go. I took my second trade that was a loss. This is the loss that I'm mad about. This first one I don't really mind. This second one is the one that I'm mad about. We see this change in the state happen right here after sweeping that internal level, and with these intermediate or with these equal highs, I think there's definitely a possibility that we can see the market pull higher. So what do? I zoom in past the 1 minute and I start saying, okay, yeah, I'm fractal trader, yeah, blah, 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 whatever. Zoom into the 5 second and I start looking for a 5 second internal model play to then go target those external highs, right? So there was a couple plays you could have taken here, but the only one that I took was the one that got stopped, right? So look, this ended up playing out, but there's really no entry here, really no entry here either, really no entry here either. And the one that I ended up taking was on, I believe, this right here. This was my trade that I ended up taking right here, placing this, and looking for this high and then this high. If this would have hit, it would have been a really crazy trade. And I risked right on this, so I'm not super mad about the loss, but I'm more mad that I wasn't able to actually, I got so attached to this small little bias that I could see this high get hit to then play our external bias that I just forgot that, bro, the external bias and the real bias is what price actually wants to do. It doesn't have to do any of these small time frame things that you want to do so you can make money. Instead, I just thought it should do this, and that was my bias. I married that short-term bias instead of looking out and saying, you really shouldn't be taking longs here, and longs are lower probability. I should have recognized that when I took this entry after this displacement, this turned into market maker sell model, because if we look, we have this 1 minute change in the state, and the 1 minute wasn't the clearest. I like the 30 second or the 15 second for this trade. We see, yeah, 30 second was probably the clearest in my opinion. I like to take this after I get displacement, right? So I see this happen. I don't really see much displacement. I would have waited until this candle closed and came again back to this level. Then right on this candle, what I like to do is I don't like to look at this previous leg and say, okay, let me make a continuation entry, maybe on an order block or for value gap. I just like to place it right back at that original change in the state level. And if you see right here, it gets tapped, right? So this was the trade that I should have taken. First take profit, second take profit, and then third take profit all the way down here. This is what I should have taken. And if you would have taken this trade in left runners, the potential is truly limitless. And that's why I love my system. But the system needs a great executor. And the issue is that a lot of times I'm not the best executor. I'll tell you guys that straight up, because I overanalyze things. I overanalyze a lot of the issues or a lot of the things that are going on in price, and I try to take a lot of super internal trades, right? Which leads to just conflicting biases and not too much. You need to be looking at these things and see 15-minute change in the state. Everything looks bearish. There are no longs. You should not be taking longs here. It should only be shorts. And if I only took shorts, I would have ended up taking this W and been breaded, right? Next thing I want to analyze here is that this is something I've been seeing play out a lot recently, so I think it's super interesting to check this out. The way I manage my trades would be this, right? So I'm taking first low-hanging fruit. Low-hanging fruit gets hit, and then I'm taking whatever is the external draw. But right when low-hanging fruit gets hit, my stop's at break even, right? Then I'm leaving for runner, whatever, right? But there's a lot of times where maybe first TP, maybe second TP gets hit. The market will then come back, tap you at break even, and then it will go, right? And this is a behavior that I've been seeing play out a lot, and a lot of traders see this, right? Right around this 1030, 1050 area, right? Within that span from like 10 to right after the 950 macro to that last ditch macro ending, you see a lot of this stuff play out, because that's usually when you get your trade. The model will continue, and then it will pull back, stop you out, and continue, right? So how can you recognize that and take advantage of it? The thing that I like to recognize here is that the reason all of this happened is because check out this. Fair retracement pulls us to -2 to 2.5. We respect that level. We end up rolling back to equilibrium as we expect, coming to hit a bigger time frame PD array on the same exact level, and we make an SMT on any of these highs, really. Any of these highs. We end up making a huge SMT, showing that this one is much more manipulated than ES. So NQ is pushing higher, right? So that it can drop harder. So then zooming down and just checking out a 30-second or a 1 minute shows us this, right? Looking at this, we see right when this hits our exact entry model play out. Beautiful. Change of the state, displacement, inverse fair value gaps opened up, gets pulled back to. Wherever you want to take your entry here, go ahead, take it. Place your stop at this high and watch how efficient this movement was. This would have been first TP, second TP, and then from there, you could have targeted really far with this one. And it's super interesting because usually it only gets stopped out once. So if you're able to get break even stopped out and then re-enter, that in my opinion is the best thing, because if you're gonna get break even, you can either just leave your position open with no break even, or you can put that break even in there waiting to expect to re-enter if the opportunity presents itself. Because if you leave your stop loss open, the market can just run through. If you put it to break even, it can tap you, it can run through. And then if it runs through, you're safe. If it taps you and makes an entry model, you could potentially get back in. It's a game of probabilities. You have to choose what do you want to do every single day? Like, what's your poison? And this is a super effective system. So if you master this kind of stuff and you're able to actually really learn it and really just devote yourself to it, the possibilities with this stuff are truly, truly endless. I mean, this is a perfect market maker model. But the over-analysis, like I said, and losing twice and not having the confidence to re-enter on the trade, that is when you see issues in your trading. If you were just able to simply think of the life that you want as a trader in the future, what is it going to look like in 5 to 10 years? I ask you, if you want that life, the thing you must do is come on the charts with extreme clarity, calmness, and discipline every single day. And you know it's right, but you're not going to do it. That's the issue. And the same thing for me. Like, I know it's right, but I still struggle with it. Everybody does. And I think that's what's so crazy about trading and about how you have to master yourself for this stuff to play out. I mean, today was a super simple day on the markets. It was really just my fault that I wasn't able to take advantage of this beautiful, beautiful opportunity today. And if any of you are watching this, I hope that this video can be a really good textbook guide to just show you what a beautiful market maker model plays out and how it actually looks in the actual markets. Super efficient action, generated liquidity on one side, manipulation, displacement, pullback, boom, efficient price action. This is how it looks. I hope this can be a super great textbook guide to you guys, and I hope this can help you to see you need to stop overanalyzing. You need to stop thinking to do this, to do that, to do that because you want to make money. You have to simply submit to the process. Stop overanalyzing, submit to the process, or else you'll end up like me. But thank you guys for watching today, and I hope you guys learned something today. Please, please, please stay tuned for this market maker model video I'm going to be making. This is going to change the way that you see how the markets move. And I swear to you, when you see the way that market maker models are around the market every single day, that the market doesn't move in trends, it moves in models. When you start to see this stuff, it will completely change the way that you trade, change the way you see the markets, and it will give you clarity in the markets. So thank you all for watching. I hope you guys learned something. Without further ado, I'm going to let you guys go. I'll see y'all later. Peace out.